Did you know that the average American spends over 30% of their annual income on taxes, with many paying more than 40% in some states? The tax system in the United States is a complex and ever-evolving beast, with various types of taxes, deductions, and credits that can make or break your financial situation. As a taxpayer, it's essential to understand how the tax system works and how you can optimize your tax strategy to minimize your tax liability and maximize your refund. In this video, we'll delve into the world of practical tax tips and financial advice, focusing on the crucial topic of tax deductions and credits. We'll explore the different types of tax deductions and credits available to individuals and businesses, as well as strategies for maximizing your deductions and credits. We'll also discuss the importance of tax planning and how it can help you save thousands of dollars in taxes each year. Whether you're a seasoned tax pro or a novice looking to navigate the tax system, this video will provide you with valuable insights and actionable tips to improve your financial situation. But before we dive in, let's take a step back and understand the basics of the tax system. In the United States, there are three main types of taxes: income tax, payroll tax, and property tax. Income tax is the tax on an individual's income, which is calculated based on their taxable income and tax bracket. Payroll tax, on the other hand, is the tax on an individual's wages and salaries, which is used to fund Social Security and Medicare. Property tax is the tax on an individual's real estate, such as their primary residence or rental properties. Now, let's talk about tax deductions and credits. Tax deductions are expenses that you can subtract from your taxable income to reduce your tax liability. Common examples of tax deductions include mortgage interest, charitable donations, and medical expenses. Tax credits, on the other hand, are direct reductions in your tax liability. Common examples of tax credits include the Earned Income Tax Credit (EIC) and the Child Tax Credit. One of the most significant tax credits available to individuals is the Mortgage Interest Credit. This credit can be claimed on up to $750,000 of mortgage interest, which can result in significant tax savings. But that's not the strangest part. Did you know that you can also claim a tax credit for energy-efficient home improvements? The energy-efficient home improvement credit can be claimed on up to $500 of energy-efficient upgrades, such as solar panels or new windows. But wait until you hear what comes next. Did you know that you can also claim a tax credit for education expenses?
The Lifetime Learning Credit can be claimed on up to $10,000 of education expenses, such as tuition or fees.
That you can such as also claim a tuition or tax fees credit for retirement savings. The Savers Credit can be claimed on up to $2,000 of retirement contributions, such as 401(k) or IRA contributions. Now let's talk about tax planning. Tax planning is the process of optimizing your tax strategy to minimize your tax liability and maximize your refund. This can involve a range of strategies, including tax-deferred savings, tax loss harvesting, and tax-efficient investment choices. One of the most effective tax planning strategies is to utilize tax-deferred savings accounts, such as 401(k) or IRA accounts. These accounts allow you to contribute pre-tax dollars, which reduces your taxable income and lowers your tax liability. But that's not all. Did you know that you can also use tax-deferred savings to save for retirement? The Savers Credit can be claimed on up to $2,000 of retirement contributions, which can result in significant tax savings. And then something unexpected happened. Did you know that you can also use tax-deferred savings to save for education expenses? The Lifetime Learning Credit can be claimed on up to $10,000 of education expenses, which can result in significant tax savings. So, how can you optimize your tax strategy to minimize your tax liability and maximize your refund? One of the most effective strategies is to utilize tax loss harvesting, which involves selling investments that have declined in value to offset gains from other investments. This can result in significant tax savings, especially for investors with large portfolios. Another effective strategy is to use tax-efficient investment choices, such as index funds or ETFs. These investments are designed to minimize taxes and maximize returns, which can result in significant tax savings over the long term. In addition to these strategies, it's also essential to stay up to date with tax law changes and updates. The tax code is constantly evolving, with new laws and regulations being introduced all the time. Staying informed can help you avoid costly mistakes and ensure that you're taking advantage of all the tax savings available to you. In conclusion, tax deductions and credits can be a powerful tool for minimizing your tax liability and maximizing your refund. By understanding the different types of tax deductions and credits available to individuals and businesses, you can optimize your tax strategy and save thousands of dollars in taxes each year. So, what are you waiting for? Start optimizing your tax strategy today and save money on your taxes. Subscribe to our channel for more practical tax tips and financial advice, and hit the like button if you found this video helpful. If you're looking for more practical tax tips and financial advice, subscribe to our channel and hit the like button below.